Are you a first-time home buyer and you're wondering how to get the ball rolling? What's the process that you need to get involved in to get approved for a loan so you can buy your first home? Well, that's what this video is going to go over, all those kind of questions of where to go, who to speak to, what are the requirements you need, what kind of things and documents are you going to need to get together, what's going to be expected of you, how long the process takes. Courtney, I'm a real estate agent here in Las Vegas, and this YouTube channel is devoted to you as, whether you're a first-time home buyer, you're a buyer or a seller in real estate, and you've got some questions, you're not sure, about certain aspects of real estate. Well, that's what this is for. So do me a favor, if you find anything in this video helpful that gets you, on your road to buying your first home, hit that thumbs up button, give me a like, or hit the subscribe button, and stay tuned for more videos. The first step in the whole process is going and talking to a lender. And I'm going to use part of my experience as to guide you as well. So the first obvious place you can go is to your bank. That's what I did when I got my first home and got my loan. Is I went to my bank, and that's actually not necessarily the best thing to do. And it turned out to be okay in my situation, because it did happen that my bank had some really good loan programs that I fitted into, and it ended up being a really good thing. So that is a first and obvious place to start. But the reason I say that's not necessarily the best place to start is because when you go to a bank, you could think of the programs that they have for home buyers and the loan programs that they have. It's like a small box. It's a small number of programs, and you might fit into their criteria, but you may well not. In my situation, it just happened that I fit into the criteria of the loan programs they had, and it all worked out okay, and that might be the same for you. So that is an obvious place to start. Go to your bank and talk to your bank. They're going to have loan officers and people you can talk to get the ball rolling. But the other option, and the next time I go to buy a home, this is the option I will be taking instead of going to my bank. I'll go to a mortgage broker. As a real estate agent, of course, I know a bunch of mortgage brokers. And basically what a mortgage broker is, they're a professional, they're certified, as a loan officer. And, they're reaching out to many banks and many lending programs. And so, they have a lot of knowledge of all the different programs that are out there. And when you go to them and, you talk to them, you give them a bit of your background, who you are, what your work situation is, how much you make, and those kind of basic things, they're going to have a pretty good idea of a loan program that's going to be more or less tailor-made for you, and it's going to be very helpful, and you're going to be able to get a good loan in that way. So my advice is, if you can, go talk to a mortgage broker. And if you happen to know someone who's in the field, that's good. If you don't, a really good idea to start the process is to actually find a good real estate agent, because a realtor, for example, myself, I know a number of really good lenders. And so when I work with clients, if they're working with someone already, that's good. But if they're unsure, or they want a second opinion, I have a number of people I can refer them to who I know, like, and trust, who are really good people who have a lot of information about different lending programs. As an example, you may or may not know right now that there are loan programs out there where they will actually help you with your down payment. As an example, they call them DPAs, a down payment assistance programs. So this is something that you're probably not going to find at your bank, for example. But if you go to a mortgage broker and they get you in touch with a number of lenders, they might put you in touch with someone. If you're saying you're having trouble getting a down payment together, for example, well, there are programs out there, for example, where lending is a competitive industry like any other. So some lenders, in order to attract your business, are going to offer you deals. And one deal that some offer is called DPA, down payment assistance program. So they will offer you $10,000, sometimes up to $15,000, which you can use either for your down payment or your closing costs. That's just an example, one example of why going to a mortgage broker is a really good place to start. And like I said, a good place to often get in touch with mortgage lenders is through a real estate agent. So at this point, if you don't know anyone, I'm going to put a link. Read my comment section. I'm going to put a link down there. You can get in touch with me directly if you want, and I'll put you in touch with the lenders that I know, or maybe you know someone else. But that's a great place to start. Okay, so now that you've started your journey in getting in touch with a good loan officer, maybe you've gone to a bank and they have a program there that's suitable for you. The next thing is, what are the requirements, and this will explain what I mean by a bank may not have a suitable loan program for you, whereas a mortgage professional, a mortgage broker may well have, and that's because of the requirements for getting a loan, whoever you're getting it from. And the basic requirements are, first and most importantly, is your credit score. And the credit score, the higher your credit score, the more options you have. The lower the credit score, it's just like a risk analysis for a lender. If you have a high credit score, it means if they lend you money, it's a good chance they're going to get all their money back. If you have a low credit score, it means you're not so well tested in terms of being a good prospect for getting the money back. And 620 is kind of the magic number for like a lot of programs, conventional loan programs. A conventional loan, they usually require a 620 credit score. And when you go to a bank, there are certain programs that are suitable for first-time home buyers. One's called an FHA program, where you can have a lower credit score under 620, but even though they might have a program that's designed for you when you have a lower credit score than 620, such as an FHA loan, a bank may have what they call an overlay on top of the FHA program, where they say, even though technically you can apply for an FHA loan with a credit score in the 500s, with our particular bank that's not going to work, because we still require a credit score of actually 640, because that's going to be the loan program that we're going to offer you. So that's a situation that you might find when you go to a bank, which is one example of why going to your local bank may not always be the best situation. It may be, as in my case, but it may not be. So credit score is the first major thing that is going to be required. So you need to get your credit score, find out what it is. You're going to have to have that, or if you don't have that, when you go to a lender, they can find that out for you. So that's the first thing of requirements, is your credit score. Secondly, is going to be your employment history. So most lenders are going to want to see that you've been working for at least 2 years. Some loan programs will not give you a loan if you haven't been employed for 2 years, and what that often means is 2 years in the same kind of industry. Let's say, for example, here in Las Vegas, obviously the casino and service industries, restaurants and whatnot are, a big part of the local economy here. So let's say you've been working, in a casino arena, and maybe you've worked in different casinos over 2 years. That's going to be okay. If you're working in the same industry and you've been in different jobs for the last 2 years, you're in good shape. But if you've been in different jobs, say you worked in the casino for 6 months, and then you went into construction for 6 months, and then you went to being a musician or something of that nature, then that's not going to be what they're kind of looking for. And on this note, also, something that's happened, particularly since the COVID pandemic hit, is a lot of people got moved around from different jobs. And many people have started working like a side hustle, maybe doing something on the side that's actually turned into a full-time job where they're actually self-employed. If you are self-employed and before that you were a regular wage earner, say you work in the casino or something, you're going to need to have been working, as a self-employed, person for 2 years. So 2 years is the basic requirement for your work history. So that's your second requirement. And then leading out of your work history is your income and your income level. What they going to want to see there is that your income level has been more or less the same or steady, or has maybe even been increasing, rather than it's very high one year, really low the next year. It's kind of all over the place. What they want to see is a steady kind of income level. And then the next thing that is going to be important is going to be, assets. What kind of assets do you have? Because you're going to need to make a down payment when you buy a home, whether it's 3% down or 10% down or whatever amount it is. And so the lender is going to want to see that you actually have funds in a bank account, or it could be, it could be a gift from a parent, for example, but they want to see that you have access to funds so that you can come up with a down payment for the property that you want to purchase. So they're your basic requirements that you need. Over the fact that you've gone to a lender, you found a good lender with a good loan program, and you know what the basic requirements are of the lender. And so now you get to the point where you're actually going to fill out a loan application form. And this is what I did, and in order to fulfill the requirements of the loan application form, you're going to need things like your social security number, you're going to need to provide all the information of your work history and your income, and to support that, you're going to have to supply W-2s, if you're self-employed, maybe 1099s, and if you don't know what those are, they're the tax documents. And you also, in addition to that, going to need to provide tax returns. And in addition to that, you're probably going to also need to provide, 2 months of bank statements. So they're the general things that are usually, always required: bank statements, pay stubs, and tax returns. And so once you've got all that and you've filled out your application form, it's important to note at this point that should not cost you anything. And if someone's going to be charging you for this, that's a big red flag. The process that I'm talking about up to now is free, and so no one should be charging you for this. So you go along to a lender, you're going to do all that, fill out the application, and once you've submitted all your information, then they're going to process that. It shouldn't take more than 24, 48 hours is usually the time that they're going to take to be able to give you an idea of what's going on, run the application. And an important part of what they do, it's called a debt to income ratio. So briefly what that is they're going to look at all your income, and then they're going to look at how much debt do you have. That's going to include things like your credit card payments, maybe you have a car payment, and then in your debts they're going to include the idea of, well, if we give this person a loan, let's put how much that loan is, and all your other debts. Let's say you had a car payment, a credit card payment, and you're asking also to now have a mortgage payment. When you total all those debt items up, that should not come to more than around 45 to 50% of your total monthly income. So that's a big part of it. They call that the DTI, the debt to income ratio. If you want more information on that, there's a link above. I do go over that in some other videos, so check that video out. But once they've done that and they've got an idea of what your debt to income ratio is, what your monthly income is, what they can do is then qualify you and get you a pre-approval letter. And basically it's kind of like reverse engineering. So basically once they get to the point where they say, okay, this person has this much income, this much debt, this is their credit score, we know that based on all that information, they could have this much income available for their mortgage payment. And so let's just use a random amount. Let's say it was $2,000 a month. So we know that they can come up with $2,000 a month for the mortgage payment. Then they're just going to reverse engineer that and basically say, well, out of that $2,000 mortgage payment, they're going to need to pay so much in interest, they're going to have to pay so much for taxes, they're going to have to pay so much for home insurance, and once we deduct those items, there's going to be this amount left on the principal, which is paying off the actual loan. And then they can multiply that out over the term of the loan, whether it's 20 years or 30 years, and they'll come up with an amount, whether it's $200,000, $300,000, or whatever it is, and you're going to be then pre-approved for that amount. So, let's assume they've done that, they've run the numbers, it's all looking good, you're pre-approved because they've run all that information. And now, at the end of that result, you're going to get what's called a pre-approval letter, which is going to say how much you're pre-approved for with that lending institution. And that's more or less like your shopping ticket. At that point, you've got a pre-approval letter. It shows you've put your application into this particular lending institution, and they've said, you know, this person is pre-approved for $300,000, for example. Now you can go out shopping for homes that are $300,000 or less. So that's the process. So, you know, I hope that was helpful for you. You know, there's a lot else involved in the process, obviously, and I go over that in other videos, various videos. And as a general overview of the whole process, check out the link in the playlist that you'll see above. In the link above, I have a good playlist on first-time home buyers. And again, I want to say, you know, if you found anything useful in this video, any of the information, please do me a favor, you know, hit the like button, hit the subscribe button, and please do also leave any comments. If you have any questions that you're, you know, or concerns, you're not sure about something, drop me a comment, and I'll do my best to answer it. And I'll even, you know, like to make a video. I love to make videos, and you know, sometimes, you know, a comment will be a good instigation or inspiration for making a video. All right, well, thanks for watching, and I look forward to seeing you in the next video.